Greetings, trading aficionados. Prepare yourselves for an enthralling session tonight with the remarkable Raghee Horner. She's ready to dive deep into her unique strategies for navigating through the tumultuous currents of today's market chaos. Plus, she'll be unveiling a special limited-time offer for her exclusive Sector Secrets Mastery, where she shares her insights daily. As we journey through this insightful webinar, please keep your eyes peeled for interactive features like our polls and exclusive offers that will pop up on your screen. Engage with fellow participants in our chat panel on the left, or direct your questions to our Q&A panel on the right. Our expert moderator team, along with Raghee herself, will be hand-on to address your queries at the end of the session. And to ensure you don't miss a thing, please hover over the presentation and click on the top right corner to switch over to full screen mode. And now, without further ado, let's kick things off. Raghee, my dear friend, the spotlight is all yours.
Nothing like hearing from you, Daryl. It is not a webinar until we hear from Mr. Daryl Gum himself. Important notes to get things started. Indeed, we have a very special offer for you all, but we are going to talk about the markets first. If you know anything about me, you know we're going to dive into some charts, examples, and those needle moving ideas that I think really you're going to be able to put to work tomorrow. All right. So let's get to it. We're going to be talking about how to find opportunities in today's market chaos. Let's grab the screen here together and we will get started. All right. That's the fun thing with 9 monitors. I get to find which awesome screen this is sitting on. All right. I believe that's it. There we go. Yep. Awesome. Yes, there we go. Great to see everybody. I'm going to go ahead and go into awesome presentation mode and we will get to work. You know, one of the things that, oh, that's not what I wanted to do. Let's try this again. There we go. All right. I'm a trader. Some days it's a brutal reminder. There we go. Awesome. All right. How to find opportunities in today's market chaos. I know a lot of us are watching a lot of the chaos just the last couple of days. So definitely welcome. Thank you for joining me. And as always, I appreciate everyone's time. We are going to get into some very important ideas and tactics today. So whether you are new to trading or you've been trading for a long time like myself, tonight's conversation is for you, right? We're going to be taking questions. I can see the questions. Now that I've got all my screens arranged, I can see the questions and I'm going to be fielding them certainly at the end of our presentation, but I'll be keeping an eye on them throughout. All right. So we're going to be addressing some big questions. What are the trades in this environment? Where are they? What are they, right? From day trading. So while we're going through this, gang, please don't think options only, futures only. Open your mind up and ask yourself, where are the opportunities? So from day trading to swing trading. So these would be trades that are held overnight, days to weeks, right? Long-term portfolio, something I haven't talked about, I believe, with you all at all, or if not in a while. We're going to be covering all that tonight, day trading, swing trading, and what am I doing in my longer-term portfolio, all right? So lots to cover. All right, kicking it off with this. What are the key things you need to know to find the right setups, right? So what are the right setups? And this is really important. First of all, everything is watch list building, right? How to master watch list building. After that, what are the skills? What are the tools to just shut the noise out, right? And then by focusing on what the message of the market is, we can find those trading opportunities. Number 3, why a sequence of steps can absolutely change your trading. Having a sequence, having a process that we're going to cover today. We're going to talk about probably the most important needle moving sequence that we've been using and definitely was delivering in July. And then lastly, what to do and what not to do in managing trades. I'm going to share with you wins. I'm going to share with you losses. We're going to talk about position size. So we're going to get into all that here today. So could not be more excited. So what asset classes, right? I never want everyone thinking that, or anyone thinking that it's about futures or options or ETFs, or it's about everything, gang. It's about options. It's about stocks. It's about futures, right? These are far more connected than maybe we think, right? So we're going to be talking about all these asset classes. And a lot of traders may not understand how they actually work together, right? How they can help you with things like watch list building and the principles that you can take into account to really gain an advantage, right? When you're finding setups, when you're building watch lists, when you're executing the trades with the instrument of your choice, or as we like to say, choose your own adventure, right? Futures, options, or stocks, ETFs, right? Have that fluency and flexibility. So we're not just looking at one thing. All right. How do I know these things work? I mean, why are we here listening to me? Not because I'm great at tech, that's for sure. We're here listening to me because of experience. The thing that I like, the thing I bring to the table is I've made the mistakes. I've traded the markets that have, I think, challenged the type of environments we're in right now. I've traded these challenging environments. I've done a lot of the bleeding and I've broken some keyboards and monitors. I'm not proud of it, but I've done it. But I bring to the table here experience, right? What's working? What have I tested? Not for months, not even sometimes for years, for decades, right? That's what we're talking about, time-tested stuff. And then, this is the slide that I guess, I got to throw in for my mom, right? The things that, here's my clean desk. This is an absolute lie. This desk, it is never this clean. If you saw it right now, I have a trader's desk, but this is where I broadcast from every single day to the folks at the Sector Secrets Mastery Room. I've written a few books. I've presented a few places. I've had the honor and the privilege of teaching traders. So for those of you that aren't familiar with me and my work, a little bit about me really quickly. I've been doing this for about 35 years, options, stocks, futures, currencies. I've traded them all. I've authored books. I've been a technical editor. That was Currency Trading for Dummies. And I've learned a lot about how to help traders in their trading journey, because trading isn't easy. I know you can do it, but I joined Simpler 10 years ago for one main reason. I love traders and I love talking about trading, and I know what trading can do for you, right? Because I know what it's done for me and my family. So it's definitely a calling. It's a passion really for helping other traders reach their goals, their potential, right? In this really crazy world, this crazy thing that we've decided to do, which is put our money at risk and try to make money by trading. So that's where you can find me. Many of you probably know me from Charts and Coffee, and of course, the home base over at the Sector Secrets Mastery. But let's talk about what is a Sector Secrets Mastery. Where am I taking all this experience and really bringing it to members in a transparent way? So Sector Secrets Mastery, this is where we get our work done 5 days a week, gang. Monday through Friday, we are day trading. Then we go on to swing trading, and then we go into longer term portfolio trades. So we're active all day, every day. And if I could brag a moment on our members, we're active from 9:30 to 4. Not just myself, but a group of hundreds of members who are focused on trading, supporting each other, scanning the markets. We are a focus group, right? This is a very focused group of traders. And together, we're tackling a very difficult thing, trading, right? When you've got the right community, it makes all the difference in the world. And I could not love and be prouder of our members. So before we jump into the charts, let me show you an overview of our trades, how they've been going. Okay, Rag, how was July? It was kind of a good month, but remember, these are all trades that we've taken in the mastery. And that's really important for me to emphasize. Every one of these are trades that members were alerted to. Okay. So first up, this is from TradesViz, and TradesViz this is not about TradesViz, but I'm a big fan. I'm a subscriber. And what it does is it allows me to upload my statements from my trading account automatically, and it spits out all the data, the good, the bad, the ugly, and I'm able to get a lot of information. I'll show you the next slide in a moment. So this is an account that I've been using for the mastery, and it's a $40,000 account. So I want to be perfectly upfront with where this P&L is coming from, right? This was July's P&L. So if you're wondering, okay, Rog, what are we looking at? This was July's P&L. This is basically July 1 to the end of the month. And this is a $40,000 account. And this account took the trades from the mastery. All the trades we're going to talk about in this presentation are all alerted mastery trades. So a common question we get, and this is a really important one, is how much money do I need to trade? I always tell traders, please don't come to the game underfunded, right? And I mean that. If someone comes to me with too little capital, I just say, look, keep studying, keep taking advantage of the information. Come back when you have about $5,000 for options and about $7,500 for futures. That's what I really believe gives you a realistic shot at beginning to put on some productive trades. So in the trade setups we'll walk through together, there's a few helpful things to know. Super helpful. All the trades are scalable. And if you've never thought about scalability before in your position sizing, this is going to blow your mind. Meaning nearly any size account can take the trades that we're talking about, right? The difference is, remember this, the difference is the number of contracts that we're trading. It's not the strategy, it's not the entry level, it's the number of contracts. So a small account or a large account can take them. So my trades are based, like I said, on the $40,000 account. This is TradesViz, and I mentioned how TradesViz works, right? The other thing I want to mention, this is a cash account, right? This is really important to mention. It's a cash account, right? So let's start by looking at some day trades, okay? All right. So by the way, this is that overall screen I was talking about from the TradesViz of this account. So you could see a little bit more information, right? So I gave you a couple highlights there. This is straight from that TradesViz. So pretty cool information. I'm not just looking at the account balance, gang. We're diving deep into P&L curves, what days are better, what trades are better. Let's talk about trades, all right? Let's talk about day trades. We're going to start with day trades. So first of all, before we get into what day trading trades we've taken, let's talk about what day trading is, right? So for us, there are trades that we set up in the morning, right, with the Wall Street bell, typically between about 9:20 when we start off in the room, about 10 minutes before the bell, to about 10:55, 11 o'clock. We then manage those trades based on our targets. We know before we even take the trade where the target is going to be. So a lot of traders limit themselves to the morning window to get in and out of their trades, and that's fine, right? We don't have to sit in front of our computer screens all day. For us in the mastery, it's a matter of looking at the symbols, using our tools to identify support and resistance automatically, and the price action that helps us determine our targets, right? So some trades move really quickly. Day trades can move pretty quickly, and we can be in and out of these before lunchtime, which is great. And sometimes the day trades are going to keep going, right? They're going to keep moving to about 3:50 in the afternoon. Why 3:50? I don't want you in a mad scramble to get out of a trade right at the bell, right? So we'll usually get out about 3:50 p.m. Eastern, right? So sometimes it just keeps going all day long. So again, these are Wall Street trading hours, as little as about an hour. But if it keeps going, we just let it. We just manage it, which, by the way, can be done remotely. But let's talk about an example. I'm getting ahead of myself. All right. So this is XLE. It's a 5-minute time frame of XLE. So before we jump into this first trade, whether it's day trading or swing trading, the process, and I want to make sure I get this really clear with you all because it's going to be a needle mover. The process has to begin with getting a clear direction on relative performance, okay? And I'm going to make sure y'all can see these charts really clearly. So I'm just going to cut my camera, all right? So we can get, so I'm not in the way, and I want you to be able to see these charts. And let's talk about what this XLE is. All right. So first step is get the direction, right? Get a clear direction. And by getting a clear direction, we can also figure out relative performance. So relative performance is the key, gang. And often it's the absolute most ignored. So we focus on the best stock in a sector or the best sector, in this case, this is a sector, the best sector in an index, right? It's always a comparison. So when's the last time you asked yourself, is this the best possible example of an uptrend that I could be using, right? Is this the absolute best example of an uptrend or a downtrend or whatever it is? You got to compare it to other like things. Hence, that's the relative part of relative performance. Okay. So the symbol that will have the best probability for follow through, and here's a little discussed part of trading, and it might sound kind of ridiculous at first, but think about it. What we trade, the symbol is more important than how the strategy we use to trade it, right? So for some traders, spreads can work. For traders like myself, calls can work. For other traders, shares can work, right? But if we look at a symbol that's not performing, nothing will work. So the watch list process is really, really important. Okay, so let's talk about XLE. We've got a little bit of an understanding of the follow through needed by focusing on clear direction and relative outperformance. Now let's talk a bit about this XLE. So this was a trade that we took on a 5-minute time frame. So this is a day trade. We plan on keeping it through the morning, maybe to 10 minutes before the bell. In this case, I paid $1.03 per option when the XLE traded down to 84.67, right? So right about this area here. The idea was to scale out at 85.20, this area right in here, and then keep on with the position. Why such a near-term target? Because once I pay $1.03, I want to be able to move to break even pretty quickly and limit my downside. That way I have the luxury of being greedy. And greedy we were able to be. We finally exited at $1.80. So let's talk about some risk and reward. I paid $103 per option. It was finally closed out at $1.80 per option, right? So 73 cents per option for a day trade. Think of the cost. Very affordable, right, gang? We're not trading $10 options. We're trading $1 options. And it's scalable. So what does that mean? The idea is that one trader can buy, say, as few as maybe 4 contracts, right? $100 options. So it's about $104 of risk to make $720 if you have a smaller account, right? Now, I also want to share with you what I did. I have a larger account. So many of our members do too. I bought 30 of these, right? I bought $30 options. And then that, of course, cost me just over 3K. I closed that position out once we hit $1.80 for $5,400. So again, think about the scalability. 30 is perfectly fine, but so is 4, right? Why can we do both? Because this is liquid and it's scalable. It's an affordable option that different size accounts can take advantage of. And I wanted to spend just a few more moments on that first trade to sort of lay out a lot of the philosophy and the approach of the room and of my trades to make sure people who have that $5,000 account say, wait a minute, I can trade 3 or 4 $100 options and make $720. And some of you out there saying, Rog, I've got a 50, 60, $100,000 account. Is it liquid? You bet. Can I trade 50 of them? Absolutely. Okay. All right. Next up is TLT. Now I'm going to show you a couple different things here because TLT is usually what I will recommend for a trader who's just starting off with some of these futures type contracts. I will tell you to trade TLT over ZB. Right? I'll also teach you how to trade ZB. In fact, I'll show you how we did it here. So the whole idea was to take advantage of the TLT call when it got down to 101.90, which is right in there. Okay. Now you can see the ZB would have given you an opportunity to do this, but the market wasn't open. Okay. But what about us TLT traders? No problem. Right? We just have to wait till 9:30. So there's the first contrast. Ron, what's the difference? First off is time. Before 9:30, it's a futures world. After 9:30, it could be a futures or TLT ETF options world, right? So that's another thing that we can do. Give me one second here, gang. Hey, again, give me 1 second because you can't see my drawing all over the screen. I just realized. So I'm glad somebody told me. Give me one moment because I do want to. I do want you all to see what I am drawing. Give me one moment. Give me 1 second, gang. All right, you know what I'll do? Let's see. Yeah, hang on, gang. Let me do this. I'm going to actually, for now, I'm going to grab a notepad because, hey, Trish, I am sharing the screen. Hang on, gang. Let me ask Lorna Bot here. Just click the content share button below the slide. Okay. Give me 1 second, gang. I'm going to make sure you guys can see this. So. Thanks, gang. Yeah, Bot, I call Lorna Bot. Y'all can, I think y'all know that. Hey, Bot, I am sharing the screen. It's the first time the drawing didn't pop up for me. Yeah, weird. Okay. That's not cool. Okay. Yeah, I'll just use the notepad. No problem. I'll just use notepad. Actually, the notepad might be even better because I can at least share with you all the numbers and you can see it clearly. All right. Can you see notepad? Hopefully you can see the notepad here. Oh, how weird. Nothing but the slide? All right, let me try. Shall I recapture the slide? Bot? I mean, just recapture the screen. Maybe that'll help. Yeah, maybe just got a bad capture. All right, gang, just bear with me one moment. I'll bring myself up. Welcome to my welcome to my office. That's a lot of Raghee there. I'm gonna get the screen. I'm gonna get the screen shared one more time, and hopefully that's gonna take care of it. All right, so let's do a screen share and try that one more. Yeah, so those of you that know my cat who loves to trade with me, that's his right there. You know the bookshelf, of course. Yeah. So let's try this here. And hopefully this will work. All right. So I want to share the entire screen. All right. Let's try this one more time. And bam, said the lady. All right. You all are the best. You all are the best. All right. Thank you so much. Okay. And there it is. So I think you all saw this stuff, right? Yeah, that came through just fine. So the charts, right? So let me show you the XLE. This is the one I was talking about just before. Right? Okay. Now let's make sure you can see the drawing. All right, fantastic. So this is the day trade that I was talking about before, the XLE, and there is the drawing. All right, thank you, Bot. All right, so we're gonna kill the camera so we can start looking at the charts. I'll be back. I'll bother you. Maybe I'll tell some jokes. All right, let's kill the cameras. Let's focus on these gorgeous, gorgeous charts. All right, so this is the one we paid $1.03 for. So this is what I was talking about. We get long in this area at $1.03. Okay. That was the idea. And then as it moves in our favor, we've already scaled out. We've moved to break even. So this $1.03 was ultimately a $1.80, right? It's ultimately a $1.80 winner. And that's what I was saying before, that you can buy one of these or you can buy, say, 4 of these, right? You can close out the trade, $720, with $104 risk. Now, as I was mentioning before, what if you have more capital? I don't want anyone left behind here in terms of account size, right? Once you understand the process, I bought 30 of these things, right? And then I closed it out for that same $1.80, and that ended up being that $5,400. So on this, right? So if I buy 30 of these, it's roughly about $3,000, right? As opposed to the person who, that's the amount of options that I bought, as opposed to a smaller account, which might just use 400. So this is what I mean about scalable and affordable, right? Okay. Next chart, TLT. Now, this was the one where we talked about, we can look at TLT. Many of you might be interested in ZB. Now, many of you might also be interested to know we trade both futures and ETF options in the room. So for some of our traders, they use the ZB futures, right? They use a long bond 30-year futures. For others, especially, please, gang, listen to me now, believe me later. Start with the options on TLT as you build your chops as a futures trader. Now, I took futures on this. Some of our traders took the 101.50 call on TLT. At the same time, TLT was setting up, the ZB is setting up. And this happens all the time. In fact, this always happens where both the ETF on the futures contract and the option, right? That option and the, here we go, both of them will set up at the same time. In this case, I went ahead and bought ZB futures. We trade those in the room. I bought those for 126.19. We exited it up at 126.27. So I want everyone to realize, choose your own adventure means I can trade a different number of contracts. I can even trade a different asset class. In this case, TLT versus ZB. So this is a gain of $93.75 per contract, right? And so ultimately, if you are looking at just this is a risk of $93.75 per contract. And this was actually a $250 winner on the future. So you can see I risked about $93, did about $250. And then the same thing would apply in terms of the setup for TLT. So the main idea here is futures will work and the options on the ETF will work. Okay. So pretty cool when you think about the flexibility that we can have as traders when we're day trading. We're not locked into one asset class. So I know there's indicators and all sorts of secret squiggles on my chart. So please just don't get hung up on the indicators. It's going to make more sense as we continue. So the first thing we've covered is direction. We've now talked about the flexibility of futures and ETF options, right? And we're going to talk a little bit more about some setups. We've also talked about relative performance and a little bit of watch list building too, right? So we're going to keep building. We're going to keep building on every one of these trades. So this is the next trade. And these, again, gang, are all July trades that we alerted and took in the mastery. So let's talk about futures again. So in this case, before I used TLT to show you what we could also do on ZB, right? This time, I'm showing you the S&P futures. It's a fan favorite, but you can trade the ES. You can trade the SPY. You can trade the SPX. Heck, you can even trade the micros if you want, right? All of this is going to be off the same setup, all right? So even though it's the future setup, all those choices are yours. Choose your own adventure. So in this case, the update that we sent out to members was to play the least of the price movement range, and we wanted to short from 44.50, 44.44.50, right? Then 44.37 and a quarter. Now, every time the ES reaches a level from which we can short or buy or just enter the market, remember, there's a corresponding SPY setup. There's a corresponding SPX setup. So don't get hung up on, but Rag, I don't trade futures. You don't have to, right? But I do want my futures traders to see that in this case, each point in the S&P, for those who didn't know, is $50. It's $50 a point, okay? Now, in this case, by shorting from those levels, the profit per contract was $22, 22 and a half points, 22 and a half points and 14 points. So that translates to dollars of $1,125 and $700. We had 2 entries. This was each set of entries. The risk, and this is what I want to talk about here that's so important. By using the setups that we're using, there is a level from which we enter. And then given a little bit of cushion, if we're wrong, we know very quickly. So the risk was just $275 per contract. Now, if you say, Rog, nice reward, but that might be a little too risky for me, or I'm nervous about futures, no problem. Because again, SPY and SPX can be taken there in lieu of the S&P, all right? But nonetheless, for my futures traders out there, gorgeous setup. Downtrend, red grab candles, short into resistance. I mean, it's pretty textbook. And that's the kind of thing that we can do when we are looking at the flexibility of, hey, we can be a day trader in the options of the ETFs. We can also be a day trader of the minis, right? So by the way, you're going to notice I'm talking a lot about dollars and points, right? Why do I refer to my profit as per contract? Why am I looking at it in that way? And by the way, if you don't know what TLT is, just in case, right? TLT is the ETF of the long bond, right? And they're just like SPY is the ETF of the S&P. It's the ETF of the long bond, for those of you that may not be familiar with that TLT. Yeah. Okay. So why do I refer to my profit as per contract? And why do I talk points and dollars? I'm not a big fan of percentages. That's the bottom line, because the last time I checked, I pay my power bill, as do probably all of you, in actual dollars. So I want you all to know what I'm risking from a dollar perspective and what I'm making, right? So the most important thing, though, is the scalability of the strategy, as we talked about already when I talked about XLE. Yeah? Tools and strategies shouldn't change depending upon the size of your account. When I first started, I had a 4-figure account. I talk about $5,000 accounts, been there, right? But the way that I've traded a $5,000 account, the way that I've traded a $50,000 account, the way that I've traded a $500,000 account, and I've even traded a $5 million account, okay? It's all the same. The strategies should not change depending upon the size of your account. So everything we're talking about is everything that I've used on all 4 levels. It's everything that you will need to know. The only thing that changes is how many contracts you can, and more importantly, should trade. A lot of traders tend to, if they're trying to be over, it's funny, a smaller account tends to trade too large and present a disproportionate risk to their account. I will tell you, on the flip side of that, large accounts tend to trade too small. That was a mistake I was making. As my account grew, I had a harder time. I had some growing pains. Yeah. So I created a formula. I said, all right, I need to get more mechanical about this. So I created a formula that will allow me to plug in my account size every single morning, and it spits out what I should spend and risk per trade. And actually, that formula exists in a spreadsheet for members in the Sector Secrets Mastery. So in terms of, can we make this formulaic? Absolutely. So again, profit per contract just needs to be multiplied by how many contracts you have. So again, profit in per contract, right? We want to talk dollars. We want to talk points. We want to think scalable. All right. Really, really important. And I love the idea, right? How much should I trade? How much can I risk? That is all answered in that scalable mindset approach. Okay, swing trades. I love swing trades, right? What is a swing trade? You know what swing trade is to me? It's freedom. I love day trading, don't get me wrong, but it's fast, and a lot of folks don't like it. I can totally appreciate that. You don't have to day trade. I love to do it now. I think it's a very learnable skill, but I love swing trading, right? Because swing trading is that type of trading that I can put on some alerts, put some conditional orders in, and because we're trading longer term timeframes overnight, right? I'm not a slave to my 9 monitors here in my office. So short-term swing trading really became a needle mover for us in the mastery, because it acknowledges that not every trade is going to follow through for weeks, right? Or even months. Sometimes it might just be days. And if I don't have that flexibility when I'm taking overnight trades, I'm going to put undue risk by shortening my time horizon. I'm able to take profits in a way that reflect what's happening in the markets, these chaotic markets that we're trading today, right? So swing trading to me is freedom, but it is an overnight position that we set up in a longer term time frame. So let's talk about it. Only 2 time frames really that I use for swing trading. So this isn't complicated at all. I'm going to look at 1 hour, and I'm going to look at daily time frames. So 1 hour and daily time frames. Okay. So this first example, this is a daily time frame of Freeport McMoran, or FCX. I love this symbol. Okay. If you're not looking at it, definitely look at it. It's a heavily weighted stock in the XME metals and mining ETF. So if you're not familiar with this, jot it down, keep an eye on it. All right. So let's talk position size as we move into this swing trade here. And again, this is an alert that we took in the mastery. Okay. So I'll walk you through the per contract profit and then to the position sizing that I take into my account. The math is super helpful when thinking about your account size, right? So for my account, I bought 10 contracts. Again, that $40,000 account that I showed you on the TradesViz. So I bought 10 contracts. Now, we talked about direction, right? And I talked about the XME just now. Relative outperformance was the key. All right. Relative outperformance was the key. There are a number of stocks in the XMEs, a whole bunch of them. But why did I choose FCX? I chose FCX because amongst the uptrends in XME, this was the best looking one. Relative performance means I'm comparing and contrasting the stocks that are in a similar index or a similar sector to each other. And Freeport McMoran in that scan of relative performance was the winner. And that was the one then that we traded in the mastery. So we focus on, how would you kind of think, okay, Rog, so what do I focus on? I focus on the best stock in the sector. It's always a comparison. Okay. By the way, it's not really hard because one of the things we put in the mastery is something I call the multi-chart. It's super easy to compare all the symbols heavily weighted in the ETF because we've got them in a single layout. It's one big chart where we look at the XME and then the next 11 heavily weighted names. And we can easily scan and say, oh, look at this. Freeport McMoran is by far the best look within the metals and mining. Okay. So in this case, and we got some questions about expiration. Awesome. In this case, it's a recent trade. We bought the 18th August. Okay. FCX 40 call. All right. So the alert we sent out is to buy the FCX between 40.80 and 40.90. So when we get down to that level, we buy the 40 call. So this was a $2.05 call. So talk about scalable. Now, $2.05 is $205. So think about your account and ask yourself, how many of those $205 options could I afford to buy? All right. Some traders might have been 2 or 3 or 4. Others might be 10. Right? I bought 10 in that account. All right. Now, again, if you have a bigger account, you can trade more contracts. Smaller account, you look at fewer contracts. Yes. All right. So in this case, the first time we scaled out was at 305. Okay. So by that point, we're able to look at a break-even stop. This is such a huge concept for us, gang. We don't let winners turn into losers. How many times have you been in a huge winner, but you didn't lock it in? And I don't mean get out. I mean, lock it in and move a stop. These are things that we do. Ultimately, the trade went to $4.95, right? $4.95. And those 5 contracts that I had left, so I scaled out of 5, right? That left me with 5 more, scaled out again of 5. And those 5 contracts at that point were worth $2,475. Okay. So I risked initially $512, right? Again, never max debit. How many of you are still using max debit? You don't need to. You shouldn't, quite frankly, right? So I risked $512 of the premium that I paid for those calls and ultimately made 4,000. Okay. And why? Found the relative outperformer, waited for the stock to trade down into my zone, which actually was this right here. And you can see how long it had been moving higher. This was just this trade right there. That's it. If you're wondering, Rob, did this need a huge move? Not at all. It was just this little move right in here because we waited for it to sink down into our range. Now, we're going to talk about the indicators. And I mentioned, all right, so we talked a little bit about expiration. All right. Next is the indicators. This is the daily price movement range. I know some of you are probably familiar with this, right? This is a volatility-based tool that looks back at historical movement and says, hey, this is where historically price is capable of moving. It's not price alone, it's volatility, right? We look back at 6 months of data to say, hey, what's the nature of Freeport-McMoRan? How much is it capable of moving? And we plot those zones right on the chart, okay? And if I've got an uptrend, like I do here, and price sinks down to this area, like it has, right, before, even if it's neutral, we can still look at buys, just like we can look at shorts, right? But I want to make sure I'm following the trend, which as of mid-July was up. I just want to look for buys. And that's exactly what we did. So that daily price movement range, gray zone of support, we're going to continue to use that, gang. We're going to continue to watch it. And that's what allowed us to set this trade up. This is a pretty recent trade, gang. We did this on the 21st of July. All right. Okay, so got a question here. How do I protect my gains from downturns? So great question, Ralph. One of the things that we did in Freeport, right, after we bought it, is we do not use an overly ambitious first target or T1. The first place that we looked to scale out of after we bought at about 40.80 was 41.55. That's what allowed the option to go from 205 to 305 in value. I take half the position off the table and I move to a break even. That's what we do. You've heard that saying, never let a winner turn into a loser. That's how we do it. And that's exactly what we did on Freeport. So that frees me up with the second half of my position to take advantage of more movement with that break even stop. So that's what we do. That's the process that we use to protect gains from downturns. We don't put exceedingly ambitious first targets. All right, next question. David asks, is the room good for those who work and can't be online all the time? So David, let me put it two ways. We have three styles, right? We've looked at 2 out of the 3 so far. Yeah, and we're going to keep going on. We looked at 2 out of the 3 so far. Day trading, I will tell you, is iffy. If you've got about an hour in the morning to spend with me between 9:30 and 10:30, I do believe, and I don't know where you are in the world. I spent a week out in California where people could day trade and then go to work because they were day trading, at 6:30 in the morning. That was awesome, right? I live on the East Coast. I don't have that luxury. So depending on where you are in the world, maybe the day trading is realistic, but the swing trading absolutely is. And here's why I can say that. So David, I do not alert you in the room after I get a fill. You might say, well, how do you alert us, Rog? When we send out an alert, and this is the analogy that I use. Who here uses a GPS? Can you imagine if the GPS said, Raghee, turn now? Oh my gosh, we'd be flying by our left turn or our right turn or our exit or whatever it is. The GPS always does what? In 1 mile, in 1,000 feet, in 100 feet, right? It keeps doing this. That is how we alert. We let you know, hey, we want to buy FCX. We want to buy the 40 call. And we want to buy it if and when it sinks down to a certain price. So then what I do is I teach traders how to use their platforms as a trading partner. Let the platform babysit the setup. Let it alert you to the proximity of your setup coming true. You know how many times I've been at lunch with my husband having a nice poke bowl and my phone buzzes and it's tossed telling me that I have proximity to a price that I know I want to be buying my option at. Or my trading view can do the same thing. So I do believe it's realistic. I do believe it's realistic to do it because of the way that we alert in the mastery. I think that's a really important distinction. Okay, so thanks for that question. Good stuff. All right, we got a lot of trade examples here, gang. Let's go to Johnson & Johnson here. So when I'm looking at Johnson & Johnson, this is a really good example of not only outperformance, but sometimes the ETF that we want to trade just doesn't have enough open interest. We don't trade illiquid names. Otherwise, they are not scalable for small and large accounts alike. All right. So this goes right to the heart of the mastery concept. Liquidity, relative performance, a strong sector. And that's how Johnson & Johnson came to be. So that was the watch list building part. Index, sector, stock. This is the sector we were looking at, healthcare, and the stock ended up being Johnson & Johnson. So this is why a top-down approach is so important. So if you think about it from index, sector, stock, it could be the S&P or the Dow. That's your index. Your sector is XLV. Your stock is Johnson & Johnson. Start thinking that way when you're building trades, top down. And this works because of high concentration weighting. A very small number of stocks and sectors have a disproportionate influence on the indices and vice versa, right? So recognize these symbols. Once you know what they are, you can see pretty clearly why the market moves the way it does. Healthcare is not going to go anywhere that Johnson & Johnson and frankly United Healthcare don't let it. J&J is the second heaviest weighted stock in XLV. And what we did here, very scalable, once again, bought the 18 August. I know a lot of you have been asking, okay, Rog, what expiration? 18 August. We did this on the 25th of July. I bought 6 contracts at $3.90. So that's a cost of $2,340. That was my cost. What if you bought 2? That'd be 1/3 the cost, right? What if you want to buy twice as much? It's twice the cost, right? The risk on this trade was $585. So of the $2,340 I spent to buy my August contracts, right? I was risking this much. All right. So what happened? First target was hit. The first target was hit. And this goes back to the question of how do I protect myself? All right. What happens? I scaled out of half the position at $7.15. Now remember, I paid $3.90. So now I'm scaling out at $7.15. This is where we put in the trailing, right? This was the next step in this trade. And the trailing got hit. So I was able to make an additional $2,085. This 715 exit was $2,145. I got trailing stopped out, right? That was the value of the options then. So my risk was $585, right? And this was the reward as we protected our downside by having a reasonable first target. Gang, please don't put your first targets in the stratosphere. You won't be able to do this. Be prudent about the first target. We have a little saying in the room. Many of my mastery members know. I don't want to be off color, but we say, hey, it's time to be a greedy bastard. Second target. We want to get greedy. A lot of traders get greedy on the first, end up with a huge unrealized winner, and then go, oh, what happened? I ended up at a loss because the first target was simply too ambitious. Yes, who's been there before, right? Of course, that's why I made these adjustments. That's what I mean about time tested. I've made these mistakes, right? I don't want you all to, have to not have a process that doesn't allow for the mistakes we all make and say, look, there is a way to trade around this nature of wanting that huge first target. It's having a huge second target, right? And moving to a break even. Little tricks, gang, little tricks. Okay, so next up is XLU. All right. Now, XLU is a really cool ETF that I would keep an eye on. It's a defensive. Whenever the what is hitting the fan, things like XLU, XLP tend to be pretty popular. So this was a really inexpensive contract, right? Really inexpensive. It's $1.70. XLU is really liquid. About 13 contracts of XLU. Okay. So I want to talk about cost and risk again. It cost me $2,040. I risked 585 of those dollars. So think about your account, what you can afford, right? As the trade went in our favor, right? And in this case, the idea, once again, I think some of you are probably starting to see, Rog, these daily price movement ranges are pretty insane. And as the market's neutral, see this yellow color down there? Think of this as the traffic light. Red is bearish, yellow is neutral, green is bullish. So I'm looking at this nice neutral environment. I'm thinking to myself, well, if we're moving higher in XLU, it's mostly green candles, I can buy these zones, right, that are just adjusting with market action. Yes? So in this case, we went ahead and exited 7 of the 13 contracts, right? So I bought them for $1.70. I exited them the first time at $3.20. Now I mentioned the first time because this is really important. I put a trailing stop in. The rest of the position was closed at $2.90. So the total gain on this trade was $3,980. I risked $560. I was able to put myself in a position to protect the downside by not having some crazy ambitious T1, right? Notice how we scaled out. A lot of folks are just taking trades from point A to point B. Think about scaling in, scaling out, right? Because if a trade's moving in your favor, let it. Yeah? Okay. Now, this is my favorite example of the entire presentation. Okay? My favorite. This is another swing trade, daily time frame of UAL. Okay, now it might sound funny because we slayed July, right? We absolutely slayed July. You saw the data I showed you from my trades viz. This is a loss, gang. This is a loss. It's my favorite example. Are you a good loser? I didn't used to be. I didn't used to be at all. I would add and defend and do all these machinations to avoid just taking a small loss. And what happened? It got bigger. Who's been there, right? Say I. Being a good loser is the key to success at trading, period, right? This chart and this loss is exactly why I've never had a losing year. I've never blown up an account in over 3 decades of trading. Is it because I win all the time? Oh, gosh, no, right? Oh, gosh, no. It's because we have the math. It's position sizing. It's a tested approach to risk management. This is the heart of the Sector Secrets Mastery, gang. So when you can talk about losers, and any one of my mastery members, if I could see you, you'd all be saying, oh my gosh, does Rog ever like taking a single loser and talking about it? Who wants to talk about winners? We don't lose it. We don't win anything from talking about winners. We learn from talking about losers. You can handle them, gang, if you don't let them become your downfall. Right? You just need a process of sizing. You need a lot of the processes we're talking about right now. Not overly ambitious T1s, moving to break evens, understanding position sizing and account risk, right? Everything I'm trying to run through the numbers with you here. So what did I lose here? Let's talk about this loss. Let me even get a nice red pen to do it. Okay. In this case, I bought 11 contracts. I went in like I went in with every other kind of trade we took. Right? 11 contracts. It cost me $2.40 each. So $240 means I spent $2,400 on these options. My risk on this was $600. Okay. This is approximately 1.25% of my account. 1.25% of my account. I exited this trade at a loss, right? By the way, never max debit. Why on earth would I risk all $2,400 of my hard-earned dollars if my system can tell me that my trade is wrong long before that? Notice we're never using max debit. If for those of you who don't know what that means I'm risking everything that I spent on these calls, right? I'm not going to do that. We're risking a percentage of that. So once that was met, that's it. I had a big old 600. I say big old, right? You've seen some of the winners we had, but it was a $600 loss. And believe me, I hate losing. I hate losing. But you know what I hate even more? I hate losing big. When we can be disciplined to small losses, we call them paper cuts. That's what we call them in the room. They sting, absolutely, right? But we don't lose a finger. So this is my favorite trade of all of them, because this is the trade that reminds us that there is no reason to say it's okay to blow up an account. It's not. It's not a rite of passage. It's simply a misunderstanding of position sizing and risk. Once you understand that, and that's what we use that spreadsheet of position sizing in the mastery, once you understand it, I'm not saying you're never going to lose again, but it's going to be really hard to blow up an account because you're just using the math. So if you add that directional bias, if you add the watch list building with the relative performance, all these things we've explained and talked about, and then to that, you say, well, gosh, why would I mind taking a small loss? Because I know probably around the corner is another series of wins. I just got to find a better symbol, right? Favorite example of this webinar, of this conversation. I hope you all benefited from that. So in terms of strike and expiration, yeah. So what's my preference? Never out of the money, Jack. Thank you for the question. Yeah, thank you for the question. Let me grab a few questions here. Sure. Let me turn this. Let me turn my mug back on so I can. All right, here we go. So one of the questions is, how do I buy the option? I like to buy, for example, in JP Morgan here, right? If I'm going to buy JP Morgan, let me show you how we do this. What I want to do, and we did this on the 14th. So on July 14th, I sent out an alert, kind of going back to the earlier question, can I work? So we sent out an alert before we entered saying, I want to buy the July 28. Now remember, this is July 14. I'm buying the July 28 option. So 2 weeks expiration, right? I want to buy the 148 call. All right, so we're doing this way down in here. What am I actually buying? I'm going to look for an at the money or slightly in the money option. I never go out of the money. Okay, so that's number one. So you can see the 148 call was actually triggered the way we did this at 149.26. So you might say, well, Rog, how do we do this? You send us an alert and then what? What I recommend is, again, use that trading platform as your partner. So when price reaches 149.26, you're just buying a call. We're not talking multi-leg, complicated margin, cash account, and you buy a call. You've already run the spreadsheet, which is just an Excel sheet. You put your account in there. It spits out how many dollars worth of options you can trade. So for me, in that $40,000 account, let's get back to the setup, right? I bought 8 of these. I bought 8 contracts in that particular account. I have a number of accounts, but this is the one that I use to best reflect what's happening in the mastery. Yes? Okay, so 8 accounts. The cost was $25.60. My risk was $640, right? But that's for 8 contracts in that account. The first scale out, I bought at $320. That was where we bought it. The first time we scaled out, now notice I didn't say close. We first scaled out at $585. Okay? So I'm talking points and dollars here, gang. Never percentages, right? Points and dollars. And the last scale out was at $890, right? And we just had to get out at some point because we were running out of time. And this ended up being a very affordable and scalable approach. $320 options, gang, not $1,320, not $3,000 options. I think a lot of folks think they have to be deep in the money with expensive options to make a profit, or they have to do some sort of vertical. Gang, these are all long calls and long puts that I'm walking you through here and these swing trading examples that I'm taking in a cash account. All right. So it's affordable and it's scalable. How many $3 and 20-cent contracts could you afford in your account, right? So it's got to be in your account, not mine. I can't tell you how many contracts to trade. That's a really important aspect to this. Some of you might be able to trade 18 of these, right? Some of you might just trade 2. right? So, but again, what I'm trying to do is find an approach where we don't have to trade with margin and we don't have to complicate the position to find the affordability we need for our accounts. Could you? Getting the timing and the tools that I'm teaching you can work with verticals, of course, right? Could you put a vertical on here? Sure, but I'm just going to get long calls, right? I'm going to keep it really, really simple. But once you get really great at long calls, what else can you get great at? Shares. Yeah. And ultimately more complicated options. No doubt. Yeah, no doubt. You can take this any way you want to, but start at the foundation of the directional bias, the relative outperformance, the timing, right? And then everything else can build upon that. No doubt. All right. So this is something that I don't think a lot of traders know we do. And that's in the mastery. I know my mastery members know this. And we've been doing this since Q2 of last year. It was a relatively recent thing we did. And we added portfolio trades, right? When I buy longer term shares, I let you all know. All right. So I'm going to show you a handful of these. We do this once a week. We deep dive macro, true macroeconomic rate of change analysis, right? And then we also look at weekly timeframes and build positions. So in this case, you can see here, this position trade is XLK. We bought this last year from $120. That was the alert we sent out to members. We bought this thing from 120. We're still in it. This is a longer term position. What's that mean? Right? What's the idea? At least 6 months. Right? The whole idea is at least 6 months. All right. Then we have XLP. This is Staples. We got into this one, right? Love this trade from 67. Right? Weekly time frame, 6 month time horizon. Last one I'm going to show you here. This is Basic Materials, XLB. We bought this one from 72 and we're still in it. The idea here is to take this weekly time frame for at least a 6 month window, and then we'll move on to whether or not we can hold it for a year or longer, because that is the ambition. But we always put it through sort of a 6 month make the team process. If it's not up by a certain amount of percentages, we'll just take it off as a trade. It's a winning trade. But really the ambition is it a good use of our longer term capital? And if it is, we'll look to keep it for a year or longer, right? So that's another thing that we do. And those are just a handful of examples that we've done in that part of our trading. So we day trade in the mastery, we swing trade in the mastery, and also we do this type of position portfolio. All right. Very cool stuff. All right. Got a question here about, let's see. Why do I buy at the money? Please go over why I buy at the price. Oh, so Gary, a lot of the examples that we've used in here have been based on a number of tools, right? One is the structure of the market. And many of you have noticed these colors at the very bottom. When this is green, I'm just going to buy. It's just that simple. All right. And then what I can do is use, look how many times the daily price movement range. So take a look at this. Look at how many times the daily price movement range was touched. Right. Now, some of you might be familiar with the 34 EMA wave. Yes, I love the wave. I've been using the wave since I was in my teens. Right. It is in my heart and soul, the wave. But Rog, where is the wave? We use the wave. And with those of you that have caught me in charts in coffee or even in the mastery, we have different ways of looking at the wave. I use VWAP. Right. I use VWAP. I use daily price movement range. But Rob, where did the wave go? Does it not work anymore? No, it works great. But how many of you have noticed the sort of chaos and the volatility that we've seen lately? And a lot of this chaos and volatility is not yielding, especially in accelerated trends. When's the last time we saw a mean reversion? So for those of you that have the wave, it was frustrating before we had alternatives because we wouldn't get a mean reversion. Will we get one at some point? Sure. But what do we do with these accelerated trends? So we don't say the wave is no good. We just say that right now, price is not reverting to the mean. It's not reverting to that average, that retracement. It's surfing volatility levels. And so that's why we're leaning so much on these. That's why we had to find a way to keep up with accelerated trends when the wave wasn't being touched for entries as often as we wanted it to be. All right. So can you use spreads, gang? If you'd like, of course, right? Of course. But I would really, really recommend get good at buying calls. Get good at buying puts. When you get that timing down, everything else that you're going to do, it's going to get easier when you get into multi-leg, collecting premium type trading. Okay. All right. So then let's see here. A couple of the questions. Is my futures method, can it be done within day trading margin? Yes, of course. Right. Day trading margin is about $500 per contract for many brokers. It certainly can. My bit of advice, and I love futures trading, gang. I do. It was the first type of trading. Look, I practically flunked out of college because I was too preoccupied with charting futures in my dorm room. Believe me, I love futures. They're my first love, but they're highly leveraged. So if you want to day trade futures, you can, but I recommend most traders start with the day trading of futures, kind of with the training wheels of the SPY, get the timing down, build some confidence, and then go to the futures. That's my sort of gradual process to a highly leveraged product. Because gang, as much as I love this thing, they can burn you quick. I don't want you to blow your account up. I want you to build confidence, learn the strategies, and go from there. Yes? So there's ways to get there. I think rather than being in a rush and jumping right into futures, we can do so a little bit more gradually and not blow up an account, right? Which is something that, as you know, I don't want anyone here to do, right? All right, so what are the key things we learned here tonight? Thank you again, gang. Thanks for being here. I know we've been together here for about an hour. What have we learned here in the last 60 minutes? Watch list building is really the step that we all tend to ignore until we realize it's the key to everything, right? Watch list building is step one of knowing where to look. A kit of indicators, whether that's one that tells you the trend or the daily price movement range, or something like the multi-chart where I can do a relative performance scan. All these things are going to give us clarity on when to buy, sell, or stay out. So you'll notice we have a pretty tight group of indicators on the charts here. The basic ones are things like the daily price movement range, the hourly price movement range, and the multi-trend. A lot of the trading that we've been doing is relying on just a handful of tools, okay? A sequence of steps, starting with directional buys, moving to relative performance, finding that best example, right? That was a sequence. That's going to add objectivity to your trading, and that alone will be a massive sea change to your trading, right? That sequence of steps. And then lastly, gosh, I hope we talk about risk a lot, right? How to manage risk in your trades to help you avoid those pitfalls. In every single trade example, I talked about what I spent in dollars, what we made in dollars and in points, and what we were risking in dollars and in points. Gang, please don't get caught up in percentages. We pay our bills in dollars, right? So I hope that being transparent with that. And I hope you learned a lot from that UAL loss. Gosh, I could have spent an hour on that particular slide, my favorite slide. All right. So can you be consistently profitable? Absolutely. Being consistently profitable is possible. I'm not a genius, gang. I was just taught by my mentor the stuff that I'm teaching you all. Position managing, risk, relative performance, being patient, letting the trade come to you. That's what my last 35 years have been like. Okay? Just being patient, letting the trade come to me. It's a lot easier. It's a lot more peaceful. And it allows me to not be in always this kind of chaotic, frenetic energy of chasing things and market orders. We wait for the market to come to us. So this is probably I'm really proud of this. I'm not telling you I'm making a ton of money every year, but I can tell you this much. I've never blown up an account, and I always have more money in my account on December 31 than I do on January 1. All right. That's it. That's the main thing. What do I tell my day traders in the morning? Do we have more money in our account at 11:30 than we had at 9:30? That's a win. That's a win. And some years maybe more than others, right? But every year I've been profitable. And more so than the profit, even though I know a lot of folks ask about that, I got to tell you, gang, when you understand the math, it's almost impossible. I'm not saying it's impossible, but it's almost impossible to blow up an account. Okay. Now you might say, okay, Rob, good for you. Good for you. You're doing well. But remember, every one of those trades were taken in the mastery. And these are just some comments from our members, right? Not my words, theirs. And this is the stuff that I absolutely love, right? This is the stuff that I absolutely love. Heck yeah, HPMRs paid for themselves in one day, right? So grateful to be doing better. That's what I love, right? So again, the members are getting it, and that's what makes me really happy. And it's a great group of people, gang. And so why are we here? We're here because I'm pretty much giving you everything you need to join me for a month. The indicators you saw me use, multi-trend, daily price movement range, hourly price movement range, the multi-charts, the spreadsheet, it's for $7, gang. I really should have just said the first 5 minutes. You want all the cool things that I'm sharing with you all, like DPMRs, HPMRs, the wave, grab, multi-trend, that slow stochastic I use. And oh yeah, the newsletter that I didn't have time to even talk about that we start our week off with. Yeah, it's $7. I mean, is there anything else I need to say? I mean, honestly, if you head on over to simplertrading.com/outlook, you'll see that there on the bottom. You can join us tomorrow. And that's exactly what I would love to see y'all do, right? Get all the indicators, try them for the month, right? HPMRs and DPMRs, you get for 30 days, okay? You get access to the top tier newsletter. You get access to tech sessions. So I know a lot of folks say, Rog, I'm not great with tech. How do I set this stuff up? We got your back. Kick the tires. Let's break down each piece here together. Full access to the mastery. That means the alerts, the trades, the newsletter, 30 days to HPMRs and DPMRs, which I know a lot of you have been asking me about, and weekly tech sessions. I think it actually ends up being 2 tech sessions a week, some weeks with Lorna. So plenty of tech to get you set up. 34 EMA wave, grab candles, propulsion dots, the Darvas, the sector slow stow, and the multi-trend, gang. You get to keep those. Those are yours. $7, those are yours. Okay. So, yeah, it's pretty crazy, right? All right. So again, you get 30 days access to the mastery. We're there 5 days a week, 9:20, starting at 9:20 for those interactive sessions, the alerts, options, futures, stocks, day trading, swing trading, long-term positions, right? This is where we put everything together every single day. Okay. By the way, I wanted to show you all an example of my notes. How many of you have seen the now famous workflowy notes? So every single session, I start putting, and I don't have them handy, and I really needed to do that. Every single session, I leave my notes on the screen, and I share them with you as well. So if you say, Rog, I had to step away and take a phone call. What did you just do? Or what did I miss? It's in the notes, right? So we keep a running notes, and every morning I send you all the link for it. It's amazing, right? And what it does is it allows you to go back later on and say, gosh, what do we talk about? It all kind of happened quickly as I'm learning. No problem. You get additional notes every day with every session. It's just something that I've been doing for myself. And I used to write on my notes in a journal, and now I just type them out and I share them with everybody. Every single session, you get notes. So live trading 5 days a week, real-time alerts, including the Simpler Trading mobile app alert, interactive Q&As with myself and bot every single week, weekly tech sessions with the bot. So no one's going to say, oh gosh, Rog, it's been a month and I still can't get my chart set up. That is not going to happen in the mastery. We make the tech sessions a regular thing in the mastery. They're all recorded. So if you go back and watch one of the tech sessions, you'll always pick something up. But we make tech a regular part of our mastery. Always have. Always have. We never want tech to be the reason that you're not able to turn the corner in your trading, right? So if you can't attend live, no problem. Between the dashboard, the notes, the alerts, the app, right? The archives, everything is available, right? And again, if I didn't mention it, $7, These indicators are yours to keep. Okay. That multi-trend alone, Yahtzee, gang. Those two colors, the bottom of my screen, that tell me if I want to be a buyer or a bull, a bear, or stay neutral. It's one of the most important indicators on my screen. And this is what everyone's been asking. If all we did was just a $7 access to the HPMRs and DPMRs, that would be a no-brainer, right? But that's just one more added thing to the overall package. So you get a 30-day access to the DPMRs, the full premium ETFs, stocks, futures for the daily time frames, right? The daily price movement range we use on the daily and the 60-minute. That's the gold and the gray, and then the green and the red that I use in the 5-minute for day trading. The hourly price movement ranges for day trading, you get those for 30 days. Okay, and then the top tier outlook, which is the newsletter that I write once a week. Every week we take a look at what the market moving macro and sectors and stocks are going to be. In fact, one of the reasons that we got as bullish as we did and financials at the beginning of the year was due to the top tier outlook work and research we were doing that said, hey, Q2 to Q3 could maybe really be the breakout transition for financials. Boom, JP Morgan monster winner, right? Financials have been on a tear. And that started with a lot of work in the top tier. And we do that every single week. All right. Okay. So if you want more information, if you have questions, like why has Raghee lost her mind and giving us all this for $7? Because, gang, August can be tough. And August is the month where if you can start to understand what is happening macroeconomically from a trend perspective and take advantage of a challenging month like August, you're going to hit the ground running in September. It's a really important month. Okay. But if you do have any questions, there you go. You can give the office a call or email them. But this is what's included, gang. All right. It is just a bananas offer. We have never done this before. Okay. It is a limited time offer, gang. The trial is for August. All right. It is a limited time offer. Please, if you've ever wanted to check out any of those indicators, most of which you get to keep. Okay. And if you want to spend some time, please don't, come to me on the 8th and go, Rog, no, gang, please don't dilly-dally. This is a ridiculously good offer. Okay. So this is it. I really appreciate everybody taking the time out. I hope the walkthroughs were helpful. We're going to be starting off tomorrow morning, getting right back to work. Okay. I can't wait for y'all to meet everyone in the room. Very supportive crew. If you're looking for a room where we focus on trading and helping each other, this is the room, gang. Okay. We have a fantastic group of people that are there to lock arms with you. It's not just me and the Lorna bot. It's a great group. They're always active and they're scanning together. I mean, you're going to love the community. All right. So if those of you that have questions about spreads and things like that, again, I don't want anyone thinking you can't do them. Of course you can. Is the timing and the tools you would use the same? Yes, absolutely. It would be the same. It would be the same. Yeah. All right. So I know I ran a little bit over. We usually run about 15 minutes over, considering all the tech issues I was creating. But I'm happy to answer a few questions. All right. Couple questions here on UAL. I bought $2,400 worth of options. I risked only $600. Not seeing the reason for the $2,400. Oh, so that had to do with the account size, Ken, that I had. And remember I said I use a spreadsheet in the mastery, which you have access to the spreadsheet. I probably should have put the spreadsheet and you get to keep that too. So the spreadsheet, you put your account value in there and it spits out how many dollars worth of options you're allowed to buy. And so the number of contracts comes from that. We like to use the word budget. We use budgets in most of our life, right, Ken? I have a budget for trading. And each level that I scale out into has a level of dollars I'm allowed to spend. So that's the budget. And that's where that came from. So $2,400 is not arbitrary. It's just what the spreadsheet would spit out based on my account value. So I hope that makes sense. Yeah, thank you for the question. I can see how it would feel arbitrary, but in that $40,000 account, that's the way we break it down. And I do use a fixed bet size approach. And that's where that spreadsheet breaks everything down for you. And like I said, as soon as you're a member in the room drive, we have all these goodies, and the spreadsheet is one of them. And once you put the number in, you'll say, oh, okay, based on the account value, based on allowable account risk, I max it out, right? Every trade has a maximum percentage risk. And that's how the budget is built. So we don't exceed that. And so that's how that risk works. Next up, sorry, gang, taking a swig of water here. I've been trying out this stuff called Mineragua. It's really good. Yeah, no, hey, Mineragua, if you're watching, I need a sponsorship. All right. All right. So next question, let me turn the camera on. Again, thank you, gang. Thanks for being here. I appreciate all the questions. Thank you, Ken, for that. So how far do I go out on calls? Marshall, I'll go as far out as needed. Now, what does that mean? If it's a day trade, I'm going to look for the nearest expiration. Maybe it's that day, maybe it's a zero dated, or maybe it's Friday's expiration, but I won't pay for time I don't need. If it's a 60-minute time frame, it might be 2 weeks. We're usually somewhere between a week and 2 weeks on a 60-minute time frame swing. If it's a daily time frame swing, I might go out 3-4 weeks or more. Now, there are other nuances. Is it a trend? Is it not a trend, right? Do I have expectation for longer term follow through or earnings coming up? Those things will make a difference, but not a huge difference. Okay. All right. The next thing to remember is when you are buying those options, and a few folks asked me about zero dated. Gang, I don't make zero dated a strategy. We trade zero dated options when we're day trading, but I'm not looking to collect credit on them. However, if we're setting up the S&P and you want to put some sort of zero dated SPX on there, there is a conversion, right? I don't do that, to be quite frank, but there is a conversion. Okay, so I base my trade size based on risk and not possible profit. Do you agree? Joe, yes, I agree with you. I don't base my risk on possible profit either. I base my risk size on possible loss. I'm with you. Good point. Absolutely. So what is our position sizing based on? How much is it going to cost me if I lose? You know, gang, we've all heard that saying, too big to fail. We all have that level. We all have that personal too big to fail level. How many times have you been in a trade and you say, I can't get out now, I'm losing too much? We all have that. It's our job to know what that line is and avoid it at all costs. And that's where that paper cut comes in. And that's where, when I talk about never having blown up an account, I know where my too big to fail line is, and I steer as clear of it as humanly possible, right? And so if we can avoid that, we're taking the best step to align our trades and our trading approach to how much is it going to cost me if I lose, right? And then we let the winners take care of themselves. Being a good loser, right? Okay, next question here is, if my target entry is long in the DPMR gray zone, okay, Michelle, when price gets to the, if the multi-trend turns red, do I still take the trade? No. Yeah, those are color combinations. It's kind of neat. How many of y'all remember paint by numbers? Right? Paint by numbers. I'm a color-coded trader. Why? Cataracts. Yes, I'm not even kidding. Cataracts. So by making everything thick and colorful on the screen, nice wide zones and so forth, I can see that. And one of the color-coded approaches, Michelle, is no, I cannot buy in a red multi-trend. No, I cannot, right? I could short. So Michelle, what about the yellow zone of the DPMR? So once you join the mastery and you've got those DPMRs and you see the yellow zone on your chart and you see a red, Yahtzee, right? So that's the color combination, if you want to look at it that way, right? It's the paint by numbers, if you will. So on long-term trades, do I use a stop? Rao, yes, we do have a stop formula for that. Oh, of course, we do. So when we do our weekly time frame portfolio sessions, we do them every Tuesday, by the way, and everything's recorded. Yes, we have stops associated with them. Yeah, I've been stopped out of 2 of those. Of all the different position portfolio trades we've taken, I've been stopped out of 2. Yes, and that is at a fixed level where once it moves there, that's it. And we also cap the risk. How many shares are we allowed to buy? Well, how many shares we're allowed to buy We think about the risk we're willing to take, and then what's the downsides to the account. So the same process applies. That same spreadsheet that I give you all as members, that same process applies. But instead of options, it applies to shares. And that's the difference. All right. Is the mastery program teaching being live or recorded? How much time is needed? It's all live. Yeah, it's all live. How much time is needed to attend? It depends on what kind of trading you want to do. If it's going to be swing trading, very little time, right? But I would always say, gang, look, this is a profession, right? This is a profession. If you can spend about 30 to 60 minutes a day learning a brand new skill, I spend, when I was trying to, I don't know how many of you have Duolingo on your, whack the microphone, on your phone. Yeah, when I wanted to pretend that Duolingo was going to teach me how to speak Spanish, I spent about 30 minutes a day on it, right? So my thought is, if you're trying to learn a brand new skill, you can set aside 30 to 60 minutes specifically for swings and the position portfolios. That's fairly realistic. Yes, that is. And again, remember, you're getting my alerts. So a lot of that heavy lifting is going to be taken care of. Okay, next up is how many swing trades set up per week? It depends on the week. Michael, we don't force trades. Sometimes we'll get a lot of them. Sometimes we'll get very few. Day trades, I can tell you, are almost 2 to 4 every morning. That's pretty consistent. As far as swing trades, it depends on the week, right? I can't say that we have, 5 a week. No, but the day trades are fairly consistent, 2 to 4 every day. All right. Okay, so let's see here. How much do I concentrate on futures? E-mini mom, you asked about S&P, NASDAQ, Dow, I think crude. Yeah, we look at the main futures that I look at every morning, and they have ETF alternatives, so you don't have to be a futures trader, but if you do want to, of course, S&P, Dow, Russell, NASDAQ, crude, bonds. Sometimes we'll look at copper. Sometimes we'll look at the euro. So it's a pretty good mix of treasuries, currencies, indices, energies, metals. Yeah. And those are important too, because if I get a good read on what's happening in crude, which some exciting things, gang, are happening in crude oil right now. If you're not looking at crude oil and the XLE, you definitely need to. If you're not looking at natural gas ETF, you need to. Natty gas may not be moving, but those natty gas stocks are. These are things that we monitor in the mastery. So thank you for the question, E-Mini Mom. I appreciate it. All right, so let's see what else we have here. Bear with me. I'm going to scroll up and keep up. Great questions, gang. I appreciate the time. And again, if you haven't already, that's all I got to say. 7. Okay. I mean, it's bonkers. Please don't dilly-dally. We're going to start the trial sessions between now and you have until Monday. By the way, for those of you who are jumping in today, here's the cool thing. The Lorna bot is going to have a tech session tomorrow. What is it, at noon, bot? So those of you that said, Rog, yep, let's get started. I'm ready to go. I want to get my chart set up. I didn't even tell you that we have a special watch list thing that we have for you as well. So for those of you that want to have a nice list of symbols and you want to know what the structure, we have all sorts of goodies. I didn't even get to all of them, to be quite frank. But yeah, I think it's noon tomorrow, right, bot? Yeah, noon tomorrow. So a lot of the goodies. How do you get them on TradingView? How do you get them on Thinkorswim? How do you set up the watch list? How do you set up the layouts? Bot's going to be doing that tomorrow at noon. All right, so we're jumping right in with both feet. Okay, what is the significance of my option date? Some traders use 60 to 90 days, where I was only using a few weeks. Mark, I'll tell you, the reason we're only using a few weeks in this environment is short-term swing. 2 reasons. 1, 60 to 90 days, expensive, right? Do I always need that much time? This isn't 2020, right? So when I'm thinking about how much time do I need and what is the underlying structure of the market, if it's a trend, I want more time. But if it's not, or if it's a shorter term time frame, I'll try to be economical about what we're buying. So I'm not buying fewer expensive options. I can buy more inexpensive options because I'm not paying for time. So it just depends on the setup and the time frame. But yeah, in this environment, I have not been going out 60 to 90 days because the follow through in this environment hasn't been that great. So we just adjust. Okay. All right. So as far as the renewal goes, gang, I want to be straight up with you all. So for $7, you're going to get 30 days of the HPMR. You're going to get 30 days of the DPMR. You're going to get all those indicators to keep here in the blue, right? But the HPMRs and DPMRs are something that the Lorna Bot and I have to actively update because of the volatility data. So if you want to keep that, there is a separate subscription, but I want you all to be able to try it for 30 days, right? That's the whole point. Is this going to be a needle mover for you or not? If you like it, of course, we have a subscription, and we actually have some really good bundle packages once you tried it out for a month. And of course, in terms of the mastery, once the month is done, you got your $7 trial package. You've got the indicators you're going to keep. You've tested out the 30-day offer of the DPMRs and HPMRs. The membership does renew. We have a quarterly renewal at $597. Okay. So I want to make sure everyone is super crystal clear on that. All right. Thank you so much, gang. I really appreciate the time. I don't want to keep you much longer. It's 9:30. I know it's maybe past some bedtimes. It's getting close to mine. We start the day really early. Let me make sure Bot doesn't have anything else. I think we're good. Gang, tomorrow morning, 9:20. I'll see you in the room, okay? The trial, the tech sessions, these are all going to be going on for the next 4 weeks, but we do have a special session right away tomorrow at noon for those of you that are jumping on tonight. Okay, so you can hit the ground running. simpletrading.com/outlook. All right, gang, be good to each other. Thank you so much for your time. I'll see you tomorrow.